Hello again, everyone. This is a video that I'm going to be doing on how to actually set up your Fibonacci tool and also to set up the levels, the same levels that I use. So hope it will be informative to you and it will help in your trading experience. So God, thank you again for this opportunity to do another video and to share some insights. We ask that you will greet those who are watching and that um, they will improve on their trading experience and we all will succeed together. Thank you again, we pray. Amen. All right, so let me just share my screen. Now, the Fibonacci retracement is a tool, excuse me, that is used to track the different retracement levels. And I use it to help me to determine when to go in and when to exit a trade. Okay. So, excuse me. All right. So, one of the first things that we want to do is to set up the tool correctly. Okay. And you click on this tool right here. You go to the left-hand corner and you will find the Fibonacci tool. So you want to draw the tool from, you're either tracking the high to the low or the low to the high. Okay. That is, you know, predominantly what it's for. So I'm going to go on my 4-hour where I actually have a cleaner setup. Okay. So for example, I want to track, this market is in a downtrend, obviously. Okay. However, because I cannot sell from my lows, I need to sell from a high point. And in order to get that high point, I need to know where the market is going to go so that I can enter correctly so I can get the maximum amount of pips for myself. Okay. So I'm not interested in going into this market right now for a sell. I want it to come back as high as possible. And the Fibonacci tool actually helps me to do that. So first and foremost, I'm just going to show you the levels that I use on the tool. And then we will get right into it. Okay. So you'll notice here that I have, right, what I'm going to do, let me try it on a cleaner part of the chart where I have less lines. Okay. So we go here, for example, and I put my tool. Okay. Now you will notice on here that I have 110% level, I have 100% level, I have a 78.6, I have a 61.8, I have a 50, I have a 38.2, I have a 23.6, I have a 0, and I have a minus 27 and a minus 61. Okay. Now, your main points on your fib tool. So if you are tracking a retracement to go in for a sell, you want to draw your tool from the highest point to the lowest point. So you put it on the highest point and track it down to the lowest point. And I'll show you how to do that after we set up the levels. Okay. If you're going for a buy and you want to track the retracement so you can get in for a buy at the lowest point, you draw your fib tool from your lowest point. Sorry, from your lowest point to your highest point. Okay, so you'll notice the difference as to how these two fibs will look like here. Let me just connect these two lines. Oh, not really. So I want you to be able to see it. So if you notice here, I started from my 100%, which is where it started, and I went down to my 0%. Here, I started from my 0% and I went up to my 100%. Because remember, I'm going for a buy, so I'm tracking the retracement. I'm seeing how far this price is going to come down before it starts to go up again. Here, I'm tracking how far the price is going to go up before it comes down again. All right, so those are the two different ways in which you use the fibs. The levels remain the same. What happens is that it applies differently based on how you actually draw your fibs. Okay. All right. So to get in and to change the settings, just double click on this trend line in the middle of it. And you want to actually go to where it says style. Okay. Now these are the levels. So I'm going to leave this up for a little bit so you can see the levels that I have written. And those are the levels that I have on my fibs that I actually use. Okay. Different traders may use different levels depending on the chart, depending on what they're trading. Different things we trace at different levels. I just like the NAS 100. And so my fibs are set up specifically for that. Okay. So I have my 0%. Okay, on the left side, I have my 0%, and I have my 0.382%. Okay, and notice that I have different colors for each of them. Then I have my 0.61 or my 61.8%. Then I have my 1%, which is my 100%. Then I have my 1.1. Then I have my minus 27%, all on this side right here. Okay. Then on the other side, I have my 23.6%, excuse me. Then I have my 50%. Then I have my 78.6%. Then I have my minus 61.8%. All right. Those are the only levels. I have other things marked here. But like I said, for NAS 100, these are the levels that work for me. These are the levels that I'm interested in seeing. Okay. So these are the levels that I have checked here. Okay. So go ahead and copy that to your tool. And you can always save different templates. So let's say, for example, you're trading 3 different pairs or indices, which I really don't see why that would be necessary, because if you can get your maximum amount of pips from one, that's just my personal thing. I just trade one and that's it. All right. So if you want to save multiple, you just click on template. Okay. And then what you do is you click at save as, and then you would name your template and then you would save it. So that way you can actually go in and you can pick from your different templates, all right, that you are actually using. Now I have quite a few of them in here that I've been using over the years, but as I've grown, then, I just basically have just one that I use right now, which is this, all right? So you can always go back and review the video and everything to actually see the levels, but these are the levels that I use, okay? So once you're done with that, you can actually choose, which time frames you want your fibs to be visible on. I mean, I just leave that. I don't mess with that. Okay. Coordinates, these are where you'd like to put if you want to get very specific. I really don't use that. Okay. All right. So once we're done with that and I'm out, okay, and my fib is set up correctly. Now, the reason I use different colors is that I can actually see what's going on in a particular zone. I can just look at a color and I know which particular zone it's in, by identifying the color. All right. So once I do that, now it's time for me to actually use the fibs. Okay. So let me get these off and I'll actually go to a move that we did last week so I can show you how I actually tracked my thing. So remember, I'm always trading from the highs to the lows or the lows to the highs, okay? That's what the market will do. Now, this major move, when I put my fibs, as you have always heard me say, I do not enter on lower highs or higher lows. So at no point in time will you see my fibs coming to a lower high or a higher low on my entry time frame. On a bigger time frame, it may line up with a higher low or a lower high, but the bigger time frame I'm just using for analysis to basically tell me what direction the market is going, where it's at that point. But on my smaller time frame, it must always be from a high to a low or a higher high to a low or a lower low or a lower low to a high or a low to a high. All right. So this particular move, as you can see on the 4 hour, okay, this market is currently in a downtrend. Okay, not disputing that. This market is currently in a downtrend. Okay, it's going down, it retraced, all right? It's currently in a downtrend. Now, that is not to say that they are not buy moves, because like I said, the market moves from high to low, okay? Or it goes from low to high or lower low to high. Now, in this case, the market came down, it made a high, then it made a low. So naturally, what I'm looking for now, I am tracking towards the high. I'm trading the retracement until it gets to the high point where it needs to get before I actually sell again. So in order to do that, I take my fibs and I put it, look for my high, and I go down to my low. Okay, that is the low point. And then once I do that, I take it over here. You know, I just spread it out so I can actually see it properly. Okay. Now you'll notice, excuse me, that the price is now at the 50% retracement level. Now the key levels that I look for when I'm trading on the NAS 100, excuse me, the key retracement levels for me are the 61% level and the 78% level. Okay. Excuse me. So those are the levels that I'm looking for. So if I see price here at the 50% line, I'm not concerned that it's going to turn around and drop because usually it goes right back to the 61% level or the 78% level. All right. So basically what I'm looking for when I draw my fibs, I am looking for a retracement that comes within this region right here before I enter for a sell. Now, not to say that automatically once it goes there, I'm going to jump in. There are other factors that I look to. For example, I want to make sure that all my time frames ahead of my 1 hour have registered some sort of a high. So remember 3 types of highs: high, lower high, and higher high. They need to register one of those type of highs before I actually get into that trade. So my biggest time frame that I'm tracking needs to register a high. So if I go down and I look, let's say, for example, my 6 hour is actually in fact at a high. Okay. But if I go all the way up, let's say to my weekly time frame, okay, let me take this off for a minute. My weekly time frame has not registered anything yet. So I'm not interested in taking the sell as yet because I know that the retracement is not over. Okay. So I go back to my time frame that I'm watching, okay, and I'm tracking my retracement. All right. So that is how I actually use the fibs to track that retracement. Now let's look at a move that actually happened. Well, let's look at how I actually got this move. So I got in here at this point, and I bought it all the way up to here before I exited at 12 o'clock on Friday. So let's look at how I actually got that using the fibs. So remember I told you that the fibs, I'm always looking for that 61 to 78% retracement level. That's what I'm looking for at all times. All right. So let's do the replay tool. So we'll replay to about here. Okay. I'm on my 1 hour. So once I look at this right here, remember, I know that I'm trading towards the high. All right. So if the price is here, coming from this higher low, okay, I'm not interested in getting into this trade right now because when I look at my 1 hour, I'll see that my 1 hour is actually at a lower high and I cannot buy from a high. The price needs to be at a low for me to get it. All right. So what I do is this big fibs right here. Okay. I put this on pause for a little bit because I'm trading towards the retracement level and it has not put on a high as yet. So I'm not concerned about that. I know that what I'm looking for now are my lows in order to be able to get in so I can get the correct buy to go towards my target. So I can take this off for a little bit. Now my focus is going to be on my entry time frames or my active trading time frames. Now, I'm not interested in taking any lows. I want to see my lows so I can go in for my buys. So what I do here is I want to draw a fibs to see where the price is going to retrace. Okay, so I can have an idea of what's going on. Now, I'm not saying that there are not sell moves that could have been taken. I could have taken a sell. As a matter of fact, last week I did take some sell moves and everything, but you know, it's not my preferred trade to take when the trend actually is telling me that it's going in a buy direction. Okay, so this is where my fibs are right now. You notice it's sitting right on the 78% right there. Okay, let's look at what price did. It went here, it did all of this, then it came down. Okay, let me extend this over some more, all the way over here. Okay, now, if you notice what price did, well, let me back up a little bit. Let me back up a little bit so I can explain something else to you right here. Okay. So price did this, and it came up. Notice it came to the 78%, okay? Which is the level that I'm looking for. When I look at my 4-hour, I'm still not interested in taking this trade because my 4-hour has not registered any type of high. So I'm not interested in taking the trade. Yes, there's a trade that exists and you could have taken a sell, but for me, I'm not interested in taking it. I'm not rushing. I'm just being patient to wait on my setup. So I'm not interested in taking it. So if I go back to my 1-hour, let's look at what happened. So price did that. Then it did a retracement. Okay, so it's still telling you that it's making higher lows, but guess what? It has not come on to create that high that I'm looking for if I was to take a sell. All right, and my high needs to come on in the 78% region. So look at what price did. So price went, it did that. Now it came and it went there. Okay, now notice price actually made a high right on the 78%. So if I was taking that sell, that's where I would have entered. However, I did not want to take a sell because I'm really waiting for the move that is going to take me in the direction of the trend that I'm looking for, which is low to high on my 4-hour. So what I will do at this time is that once this high has been completed at my 78%, this fib has no more use to me. Okay, so what I do, I'll delete that fibs. Now, my new point, because remember, I'm tracking to get my retracement so I can get my buy, so I can go in for the buy to buy towards the high on the 4-hour. So what I do, once I see that the price has completed a high, okay, what I'll do is I'll take my fibs and I'll go from my low to my high. Okay, that's going to be my new fibs that I'm working with. Okay, and now I am tracking towards my retracement, which is now going to be my 78% point, and that is where I want to enter the trade. But in order for me to enter the trade, all my time frames, my 4-hour, which now completed a lower high. So if I was taking the sell, this would be a valid sell for me to take. Okay, and I would trade this down until a low, some sort of low is created. But remember, I can't be looking for the word low again, because the word low cannot come up until a high has been created. So I can either look for a lower low, which is going to drop below here, or I can look for another higher low. All right. So now that I'm doing that, and I know that I'm tracking, I'm trading towards the high, that is going to be the bigger move. All right. I'm only interested in the bigger moves. So now that I'm on my 1-hour, I am now tracking this back to my 78% line. All right. So look at what price did. So it came down, boom, it put on a low at a 38%. Okay. Why am I not taking this trade and it has a low on? Because I do not take trades at my 38% line. And also, my entry line is either going to be my 61 or my 78%, and my 4-hour also has to register some sort of a low for me to take that buy. Back on my 1 hour, this is what happens. So you see that the price did this. It came down, it did all of this right here. It came to my 61%. Now I can take a trade because it's at my retracement level. However, for me, my strategy says in order for me to take a trade, I need to make sure all my time frames are saying the same thing. So when I look at my 4 hour, my 4 hour is not telling me that it's at a low point. So although it's at my 61%, I decided to wait on that trade. Okay. And some people took the buy and they made good money off the buy and stuff. I just wanted to wait. I was already up over 200% on the week already. Okay. I already had 7 trades for the week with no losses and up by over 200%. So all I needed to do was just wait. There was no rush. Okay. So I go back to my 1 hour, which is where I'm tracking. Okay. And I realize now that I want to make sure that price comes to the 78% and puts on that low that I'm looking for on my 4 hour. So price continued and it shot up. Okay. Then it shot up again. So the buyers were getting really excited about this move, which rightly so, it was coming from a 61.8%. But for me, I didn't have that added confirmation that I needed. Remember, the more confirmation you have, is the better the move is going to play out. 3rd hour, buyers were still getting excited. The market was going up. Okay. Then 4th hour, it went up again. Nice buy. But notice what was happening while it was going up. The 1 hour was not putting on any type of high. It was still sitting at a low position. And that is the key to look at right there. Okay. So I wasn't interested in it. I said, you know what, I'm going to wait. So the price did that. It did that pullback. And then overnight, it consolidated. Overnight, it did some amount of consolidation. And then it formed a higher low. Sorry, a lower high at some point. Yep, it formed a lower high. Okay. And then look at what it did. So you're now at 5 a.m. Okay. That's what price is doing. When it came up, it formed a lower high right there. Now you're at 7 a.m. Now, when you look at your 4 hour, you see that your this is actually going to show that before, the 1 hour actually plays out. But if you're on your 1 hour, you'll notice that the price is sitting at a lower high. So there's no way I could be going. Remember, I'm waiting for the buy, and I'm waiting for the buy at my 78%. Okay. So you're now at 7 o'clock. NFP is coming out at 8:30. There's no rush for me to get into the trade. I wait for the market to give me the setup. NFP, any news that's coming out, if I'm not in the trade, will actually track towards the setup that I'm waiting for. So I'm not in a hurry. Okay. So price did that. Boom. You're now at 8 o'clock. This is what happened at 8:30 within that hour. Price came all the way down to my 78%. Now, if you look at your 4 hour, this is what you'll see. This is where price was. Okay. At your 8:30 mark. Now I have all the confirmations that I need. My price on my 4 hour is sitting at a type of low. So it registered a low. Now remember, I cannot sell from here. So all of those people who were telling people to ignore the bulls and everything like that and go for the sells, they were totally incorrect, because you cannot sell from a low. You have to wait until the price goes back to a high for you to sell again. All right. So what I did was that when I saw price was here and it touched my 78%, okay, what I did, of course, this is my entry. I'm waiting on the 78% right here. So I have what I need on my 4 hour, so I don't need to go back and watch my 4 hour again. I'm back on my 1 hour, and I know that I have what I need. So my entry price is going to be at my 78% line. Okay. Price did that. It shot up. Did that right there. Okay. Price did that. Continued to go. Price did that. Went up to the high. I think this was about like 11, 12 o'clock. This is where I actually came out of this trade, around close to 12 o'clock. All right, that's where I came out. Now let's measure how many pips we have gotten just by me waiting on my setup. 78% line. Measuring from there all the way up to here. That's 3,702 pips. Okay. If I was trading $1,000, okay, that 3,702 pips, I'd be using a lot size of a 0.04. So 3,702 times 0.4, because it's 40 cents per pip, would actually be $1,480 on that particular trade. Just that one move alone in 3 hours. Okay, the move actually went to about 4,000 pips by the time I came out and everything, which I will show you. But in 3 hours, you just doubled your account plus $480. So if you're using $1,000 and you had $1,000 when you entered this trade, by the time you entered using my lot size, of course, I risk 30%, 30, 35% of my account on every trade that I take. Okay, you would have had a total of $2,480.80 at the end of 3 hours. If you're using $1 million, you'd have had $2,480,000. All right, now let's look at where the move finished. Okay, because all this time, people were in the chat saying, oh, you know, ignore the bulls, it's going to sell, it's at resistance. No, it's not. It's going up until all those time frames complete their high. And once they complete their high, then the price is going to sell. So I'm not disputing the fact that the price is in a downtrend. We're not disputing that fact. However, in order for you to take the sell, you must wait for the right setup. And that is what I did last week. All right, let's look at where the move finished. So it went that, it did that pullback and it went up. It kept pushing up, okay? That's where the price actually ended on Friday, okay? Now, the highest point it went on Friday, so if you actually stayed in that move until the end of Friday, your total pip haul on that would be 4,851 pips. Now, you can argue and you can say whatever it is you want, but the numbers don't lie. That was my entry. That was my exit. Total move on Friday was over 4,500 pips. Okay. Now, the move based on my take profit was actually here at this blue line. Okay. I didn't want to hold the trade over the weekend. I was comfortable. At this point in time, I was over 500% on my account for the week. 8 trades, no losses, over 500%. 570% to be exact was my profit for last week. Okay, just by waiting on the correct setups. So, because the price is still expected to go here, okay, I'm not just going to jump into this move right now and say, oh, yes, I'm going to buy it. No, I need this price. In order for me to get in for another buy, this price has to come down and make a low, which is essentially going to be a higher low for me to get in. So all my time frames are going to have to need to register those lows in order for me to get back into that trade. So that's pretty much how I use the Fibonacci tool to actually take my trades, but I don't rely only on the Fibonacci to take the trades. There also has to be a number of different confirmations. So always practice it, develop your own strategy, guys. It's not hard. It's just about practice and consistency. And please do not use a live account if you're not comfortable with the strategy. You don't need a lot of money to make money on these markets. All you need is patience, consistency, and the ability to know how to do the proper analysis, which will help you to know what you're waiting for. So thank you very much for watching this video. I hope it was helpful to someone, and I will see you the next time. Take care. Bye.